Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so what the big players in the market are doing. So essentially hedge funds, so the non-commercials in the market, so the big institutions, and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite strong historical monthly support and demand area. In fact, what we know is that from here, all these previous rejections to the downside were created. Every time that the market tested this zone, it got rejected to the downside quite aggressively. And then the market, with this impulse to the upside, broke above this resistance, creating a monthly close above the zone. So at that point, all the previous resistance was turned support. The market retested the level and is currently rejecting it to the upside, because when there is a strong level of resistance, as we know in the market, and the market has already respected that level as resistance in multiple occasions, after the market breaks above the zone and it essentially creates a close above the area, at that point, all the previous resistance becomes support. And on the retest of the previous resistance turned support, you would expect the market to create a rejection to the upside, which is in fact exactly what happened here. So the market reacted exactly as you would usually expect when there is such situation. So on the monthly, everything looks quite clear. Now, what we can also notice is that we just had a very strong impulse to the upside, and now we just got this start of the correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg, and that shows us how we have a 0.32 retracement exactly at this area. Now, what we would naturally expect in a situation like this is for the market to go and retest this level and then to continue with the uptrend, because an uptrend is simply a series of impulses and corrections in which every time the market is creating new higher highs and higher lows, because no market can just go straight up in a straight line without any kind of corrections, because at some point the market would become overextended. In fact, the definition of an uptrend is a series of higher highs and higher lows, because every time there is a correction, so a higher low, new buyers can step in and drive the price higher. So corrections are needed in order for new buyers to enter the market. So in this case, a deeper correction will give the possibility for more institutional longing, which at that point could potentially push the price higher. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders analysis. For now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is that at the moment, we don't really see a clear direction in the market. We kind of have a range-bound market in between these two levels. We have the bottom here, which is currently acting as support. We can see how the market is respecting it as support, and the top here is acting as resistance. And we can see already on two occasions, the market respected this level as resistance. So until the market will remain in between these two levels, we could expect more horizontal price action to be created. However, at the same time, we can notice how the market has just created this candle here. So we can notice this red candle with a red body and a quite long wick. Now, usually when you see a candle like this on the weekly time frame, the next candle will try to fill in the wick. And the reason for this is actually quite clear. And it is because if there is a candle like this on the weekly, it actually means that on the daily we have an impulse and correction, in which the correction is exactly the wick that we see here on the weekly time frame. So the next logical step would be on the daily time frame to see potentially a bit more bearish price action being created. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, the situation is quite clear. In fact, what we can notice is that we just had this strong impulse to the downside. The market then followed with a correction, but in creating the correction, we have seen an impulse, correction, the market then tried going higher and now seems like it's going lower. Now, if from here we will have to push lower, that would essentially create an M pattern here from a daily standpoint. And in general, after the creation of an M pattern, what you would expect is a potential push higher for the completion of the M pattern at the neckline. This is a pattern that the market likes to create over and over again because basically it is a manipulation. And after the stop hunting, usually the market continues higher. We can see, for example, here the M pattern, and then the market created a rejection to the upside. So if the market from here will create a push lower and create this M pattern, at that point, there is a good probability to see a potential rejection to the upside fueled by institutional longing. Now, speaking about institutional longing, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for gold, we can see how with the last reports, net positions have been increased. We went from having 234.3k net positions up to having 262k net positions. So already we're starting to see this shift back to the bullish side for gold from an institutional perspective after we had this decrease of net positions. So institutions are moving back to the bullish side for gold, and there is definitely the possibility that if the market will correct, more institutional longing could take place. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, if the market will correct and create the M pattern, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in the description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.